How to get filthy rich investing in cryptocurrencies in 2018. If you had a time machine, which strategy would have made you the richest today? And will that same strategy work now and into the future? In this video, I'll give you the answers you seek. So for those of you in search of the holy grail of cryptocurrency investment, you've found it. Plus, I'll give you the tools to immediately start using the strategy today. Introducing a simple yet powerful popularity indicator that predicts winners and losers. The popularity indicator states that the more popular a cryptocurrency, the more likely it will continue to grow even more popular. And in this diagram, we're illustrating the effects of exponential growth. One person turns into 3, 3 turns into 7, and then 7 turns into 30. And you can see the growth exponentially expanding as more and more people spread the word. But there's a catch. After popularity has grown exponentially, its growth will inevitably slow down. Think of Facebook. They're running out of potential users to attract. You want to buy popular coins before they have exponential growth, like finding the Beatles before they went big. And this can be achieved by following the 30-day trading volume over time. The trading volume is equal to their popularity, and if this is growing over time, you want to increase your risk in that coin. But if it's shriveling up and dying, then you want to reduce your risk with that coin. So do you want safe small gains with less risk? Or do you want larger gains with greater risk and difficulty? Or perhaps the best of both worlds, a volume-weighted index of all coins. Let's go back in time and see how well the popularity indicator has worked. In 2013, there were really only two coins, Bitcoin with 94.5% of the popularity, Litecoin with 4.5% of the popularity, and then there were 22 other altcoins that only had a total of 1% of the popularity. And in this diagram, we can see what our return to date, even after the 2018 crash, would be if we'd invested in all of the coins available in 2013. If you bet your money on the two popular coins, you returned 6,834% with Bitcoin and 1,967% with Litecoin. 8 of the 24 coins in 2013 went to $0. 5 have had a negative return 5 years later. 6 had a low return, and only 2 coins beat Litecoin and Bitcoin. In 2013, the Vegas odds were 95-1 in favor of Bitcoin, 5-1 in favor of Litecoin, and everything else was betting against the odds with a chance below 1. By 2014, the scene had changed. Bitcoin's popularity dropped from 94.5% to 60%. Litecoin jumped to 9%, and new technologies such as Dash, Ripple, Dogecoin, Bytecoin, MadeSafeCoin, and Monero arrived to the party. And we can see now new coins are starting to outperform Bitcoin. Dash with a 1,962%, Ripple with a 13,000%, Dogecoin with a 1,900%, Bytecoin with a 3,900%, MadeSafeCoin with a 1,400% return, Monero with a 4,500% return, all outperforming Bitcoin if you just invested in 2014 and held. This time around, 6 of the top 15 coins outperformed Bitcoin by a factor of 2 to 13 times. And if you'd invested a tiny amount of capital into every coin in 2014, you'd actually have 2 positions now up over 3 million%. This is TIX and NAS, up 3.3 million% and 3.2 million% if you'd bought and held to today. And that includes losing 90% of its value in the 2018 crash. If you had sold it in December of 2017, these returns were about 10 times higher. Even just $10 invested into each of these two coins would be worth $600,000 at today's prices and closer to $6 million last Christmas. There were only 103 total coins back in 2014. Moving on to 2015, the start of the next big bull cycle in cryptos, we can see Bitcoin jumped back to 74-1 popularity Vegas odds. But again, 6 out of the top 14 coins outperformed Bitcoin by up to 10 times. We can see that Ripple has now returned 4,564% if you bought in June of 2015. Dogecoin up 2,700%. Stellar jumps into the scene with a 7,497% return. Dash up to 6,900% return. Bytecoin a 7,600% return. And Monero really takes off, delivering a 23,841% return if you'd bought it and held through today. Bitcoin's success gave birth to competition, which has slowed its growth. By 2016, we can see Bitcoin's ability to outperform other popular coins is fading quickly. This year, 10 out of the top 18 most popular coins will have outperformed Bitcoin even after the 2018 crash. And we can see Ethereum returning 1,560%, Ripple 8,000%, Litecoin 1,200%, NEM 1,200%, Dash 2,600%, Dogecoin 1,800%, Monero 7,400%, Waves 1,000%, Stellar 13,000%, and BitShares 2,900%. And this is against Bitcoin's 900% return. The picture from June 2017 to today is a little distorted, as the current prices for most altcoins are down by 80 to 90% from their recent highs in December of 2017, leaving only 2 of the top 24 coins returning a better return than Bitcoin's 153%. However, if we observe the return from June 2017 through December of 2017, you'll see that 6 out of the top 10 coins still outperformed Bitcoin. With Bitcoin's 554% return from June to December of last year, it was outperformed by Ripple with a 936% return, Litecoin with a 567% return, NEM with a 799% return, IOTA with a 690% return, and Dash with a 637% return. So with altcoins now down 90% in 2018 and Bitcoin down 65%, where do you want your money invested going into 2019? And you got to ask yourself, should you buy it all? Introducing Portfolio Builder. We'd like you to try it out for free for 30 days. Let me give you a little look around our portfolio so you can see how it works. So let's take a look at the Long Portfolio Diamond Level Super Aggressive. So this is the hardest portfolio to build. It requires the most time and the most services. In the yellow, we're looking at all the coins which we can buy on Changely and store in a Nano Ledger S, which is the bulk of our portfolio. The blue coins we're purchasing on Binance and storing securely in Binance. And then the final batch of coins, these turquoise coins way down here, are being purchased through IDEX.markets, a decentralized dApp platform where you can get ICOs and dApps based on the Ethereum blockchain. And if we click over here on the Money Manager tab, you'll see that there's 3 different levels of aggressiveness. Essentially, on the super aggressive setting, we are artificially lowering how much Bitcoin and Ethereum we should own using a trading strategy that is tracking trading volume. So the 30-day trading volume per coin relative to all the coins in the portfolio is how I'm determining my target size. And so in the Money Manager, this little calculator is constantly telling me how many coins to buy or sell at any moment to balance my portfolio based on trading volume. And so I always say that trading volume is similar to profits in the stock market for each cryptocurrency. So the more trading volume, the more profitable that cryptocurrency is. And so if we take a look, we can see where our biggest profits have been generated in this advanced portfolio. Our basic portfolio only has the yellow coins. Our gold program has the blue coins, which are yellow plus blue. And then our diamond has the entire portfolio. But the biggest profits have been generated on EOS, Bitcoin Cash, Dash, and then you can see the profits are really spread out because our positions get dramatically smaller as the trading volume is far less with these new technologies. So today I'm not going to do any balancing. We're actually getting ready to do a big release of some new content, and we're actually combining our long portfolio with our short portfolio. And so right now I'm not doing any sort of hedge in the market with this portfolio right now. But when I do feel like we might be close to another crash condition, I will hedge my portfolio with the short portfolio. So we'll learn about that more when the time comes. Now, what we're looking at here is the Portfolio Control Center. So it's a lot of work for basically two of us to maintain 10 portfolios of this size. And even though these are all just hypothetical, paper-traded portfolios, we're keeping it all transparent. And you have access to all of these links to view every trade and every spreadsheet as we go. So at the top of the links in the description box, you'll find a link to the Portfolio Control Center. And then from there, you'll find links to every single portfolio we're maintaining. And so the swing trade basic super is where I'll be attempting to swing trade. I'll either be long or short, but rarely long and short. And so for a lot of people who want to try to predict market action in the short term, you'll probably enjoy this portfolio strategy the most. In the rest of the portfolios, I'm doing a long-term outlook in holding a basket of cryptocurrencies, and then from time to time introducing a hedge with a short portfolio. And so none of these have had a whole lot of action on the short portfolio. We just launched all of these 2 weeks ago, and they're all currently long with one specific setting. So we have 3 diamond portfolios, 3 gold portfolios, and 3 basic portfolios. And so far we can see that the more diverse portfolios holding a greater range of cryptocurrencies is performing better than the smaller baskets. And let's just take a look. They're all doing very well, but right now the basic conservative, which is an absolute true index of the top coins, is up 11% in the first 2 weeks with a $7,306 profit. And all these notes down here are how much I need to buy or sell if I wanted to rebalance the portfolio to match the current 30-day trading volume. But I'm not making any optimizations today. In the basic aggressive, I am artificially lowering the 30-day trading volume for major coins so that I end up with bigger positions in alternative coins. And so the assumption here is that Bitcoin and Ethereum could potentially be overtaken as the top cryptocurrency by new upcoming technologies. And then the basic super aggressive, again, performing very close to the basic aggressive. And as we work our way down the line, we can see a pretty consistent jump in profit as we go from basic to gold to diamond. The gold portfolio is up between 9,000 and 10,000. And once we get to the diamond level portfolio, you can see that our lowest return is 9,000 while our greatest is 12,000. And if you just saw that update, it's because I actually had to pull up that spreadsheet and trigger an update. It hadn't been updated today. So far there's been absolutely no rebalancing. I like to be very passive and lazy, you could call it, in terms of when I'll take action. And that's not because I really want to be lazy. It's really because I think that these trends will continue as Bitcoin hits different mile marks. So right now I'm really looking for Bitcoin to jump up towards the $8,000 to $9,000 mark before I'll look at doing a lot of rebalancing. Here's a quick look at our worst performing portfolio today. It's the gold conservative setting at this point in time. And of course the big gainer is Ripple. If people are wondering if I think you should take profits right now, no. In fact, look in our portfolio, we actually have half the position size as our target size. So what Portfolio Builder is telling us to do would be actually to sell some of this Bitcoin, which is now overweight, and load up on some of these coins that are below their target size. Most of them are quite accurate. So right now the only real big adjustment we might make would be to sell some Bitcoin for Ripple. We're a little light on the Dash, which has been also delivering a fantastic return. Dogecoin has the greatest return in terms of ROI, but a lot smaller position because it has a lot less trading volume. And right now we can see the market's clearly starting to heat up. In my swing trading portfolio, where a month ago I went short, captured a big gain, sold that, which you can see the gain right here, and then went long, and currently it's only holding Bitcoin. Please keep in mind that the ROI it's calculating here also adds in all the profits that have generated from the short portfolio, which all end up just increasing your Bitcoin holdings. And we're having similar results in all of the portfolios because they have a very, very similar makeup and composure. This is the basic conservative portfolio. It's holding mostly just the big coins, and it has a huge Bitcoin position of 52%. This is a true index of the coins it's holding, and you can see it's also light on the Ripple position. If we look at the basic aggressive portfolio, currently up 18% with an $11,915 gain, and this portfolio is also short on Ripple as well as Dash. And in fact, I've decided that we are going to balance out the Ripple and Dash positions by selling some Bitcoin in all of these portfolios. My partner who works with me side by side is going to go in there and modify all these positions and sell some Bitcoin to get our Ripple and Dash positions ready for the next big bull move. And so by the time we cover the rest of the news, we'll be able to go back to these portfolios and see the adjustments. Here we are at the basic super aggressive, sitting on a $7,500 gain with an 11% profit. This is the gold conservative portfolio. This is the worst performing so far, still up 8.5%. And the same thing's happening. The big gains are coming from these coins. We're light. We're going to go ahead and increase those positions. Here's the gold aggressive, up 9.8%. And it's the very same story. Gold super aggressive, up 9%, same story. And of course, the difference between basic and gold, if you've been following our product for very long, is that the basic product is just the top 10 coins that can be stored safely on a Nano Ledger S and traded anonymously with websites like Changely, whereas the gold membership has everything held at Binance, and we're about to jump into our diamond portfolios, which extends into the dApp market. And right now we're only buying Ethereum dApps, but we're very close to adding an EOS exchange, which has all of EOS's dApps. And then of course we have a lot of other smart contract coins coming out. So now we're moving to the Diamond Aggressive, up 16% with a $10,000 profit. Also short on the Ripple position, short on Ethereum. I'm not gonna optimize that position just yet, but the Dash and the Ripple position we are going to go ahead and balance out today. And then here we are at the Diamond Super Aggressive. This is the portfolio I think will perform the best when we look in a year, 2 years, 3 years from today, as it carries the greatest amount of assets with the biggest weight towards the bottom. And if you haven't done so yet, I highly recommend you subscribe to our YouTube channel, click the little bell so you automatically get our daily notifications. Go to portfoliobuilder.io. There's a link in the description box. There's a link up in the top right. There's a link in the left-hand corner of the video. Click on the Join for Free button. No credit card required. We have a world-class education system that you immediately get access to. Lots of links, security links, money management strategies. We have a live chat if you want to leave us a message and chat with our team. On step 2, you can book a coaching call with myself. There's only about 4 spots a day, so book them up while you can. This is probably only a feature that will be available for the next 3 to 6 months, with myself at least. Step 3, we teach you the ins and outs of how to insert data into the spreadsheet. There's a PDF to download, print, put on your side. And step 4, we teach you how to use the short portfolio. This is a lot more advanced and can be very useful to reducing the volatility in your portfolio. And in several years, when we think we've gotten to a new market top, we can look at just going short the market. But we're a long ways from going completely short.